Welcome. We're going to show you how to do your financial management one day at a time. So let me go ahead and share the screen so that you can see what we're talking about. Okay, so basically, we're going to talk about 5 steps for masterful financial self-control. Tracking your finances is what we're going to be talking about because that creates awareness. Tracking your financial transactions totally creates awareness for you, and it also we're going to talk about planning your upcoming financial transactions because that creates intention. Okay, so bear with me just one moment. Okay. All right, so how do we do this? So we start with a starting point. First of all, we're going to start with our prior month-end checking account balance. So if it's currently April, your prior month is going to be March 31st. If it's currently October, we're going to start with September 30th. So you're going to start with your checking account balance from the very end of the prior month. Step 2, you're going to log every transaction that's happened since the beginning of the month. So again, if it's September 30th is where you start, and then you're going to log your October 1st, 2nd, 3rd, 4th, and 5th transactions. Step 3 is you're going to know any anticipated transactions that are going to happen for the rest of the month. So let's say today is October 5th. You start with September 30th. That's your checking account balance. You log whatever transactions happen between October's 1st, 2nd, 3rd, and 4th. And then from the 5th forward for the end of the month, you say, this is what I expect to happen. And I'm going to show you an example of this shortly. Step 4, and this is the whole important part, this is the whole reason we're doing all this, is you're going to spend only when you have a source. So what I mean by that is, remember we talked about anticipated transactions for the end of the month? Let's say you have a category of that you budget for called fund money. And let's say that your fund money budget is $250 and you got $250 set aside for the month of October. And let's say one of your friends calls you and says, hey, I want to go to this concert. Why don't we fly to Miami, go to this concert, and you do a budget and you figure out that trip is going to cost $1,250. Well, you only have $250 of fund money, so you have to say no thank you to that. But let's say your good friend calls you up, another good friend says, hey, let's go to the movies. And you do your budget for that and you say, well, you know what, that's going to cost at most $50. Well, you do have $50. So you can say, I have a source of $250. I know I have $50 available. I'm willing to spend that $50 because I have a source, and that source is the $250. Those are the major steps. We'll talk about optional step 5 a little later. All right, so why do we do this? The main reason is to create awareness and discipline around your spending. So ideally, every single time you engage in a financial transaction, you're employing awareness, discipline, and intention. Our world tends to move very fast. Our financial system is set up to strip you of all that awareness. Transactions happen really easily. The most successful businesses remove all the friction from a transaction, so you don't even realize you're spending money. Think about like Uber Eats. You can go on Uber Eats, order something really quickly. You're not even thinking about how much it costs. You just say, I want that cheeseburger, order the cheeseburger. Then I go about my business. Somebody shows up at my door, delivers a cheeseburger, and I don't even think about what it costs really. I mean, sure, you can look at the price and you can meditate, okay, well, this costs X, but it's so easy just to click that button, which is why that's one of the items that a lot of people overspend on. The easier it is to spend money, the easier it is for you to get broke. But the easier it is for you to accumulate money, you want to actually automate the things that make you more wealthy, like saving money, for example. You want to automate that. You want to make it a little bit more frictionful, create some friction when it comes to spending money. And that's why we're creating awareness by reflecting on everything that we've spent going forward. Okay. So how do we do this? Guess what? Good old-fashioned checkbook. Your grandparents probably used one, maybe even your parents. Here we are, we're going to do it too. So you have a few categories. You got your company, who paid you or who's getting paid, what dates did it happen. If the money went out, you put it in your outgo column. If the money came in, you put it in your income column. And then your impact is, well, what was the net impact of that? If it was outgo, it's going to be minus that amount of outgo. If it's income, it's going to be plus that amount of income. Your mechanism is going to be like, how did the money, did we do it on our credit card? Did we Zelle somebody? Did they Zelle us? Did we write a check? That's the mechanism. And then the balance is how much money is left after that transaction occurred. And then lastly, the category. What is this? What are we doing here? What is it? And we'll show you an example. So I'm going to give you a couple of examples. So you're going to follow along with a couple of examples. In one example, we're going to say the month ended on February 28th, and we had a month-end balance of 585. The other example, I'm going to show you how you could do this on paper. The month ended on January 31st. You had a balance $246.38. So we're going to walk through both examples. One is a little bit more of an electronic example, and the other one's on paper. Okay, so let's log each transaction that happened since the beginning of the month. So remember, we started with that month-end balance of $246.38. Well, on February 21st, my business paid me some income. So I had income of $150. That's a positive $150 impact. It came through direct deposit. My balance went up to $396.38. What category? It's income. Second transaction, again, on February 21st, 26, I had some more income, $275. The impact is positive $275. It was a direct deposit. It increased my balance to $671.38. Again, the category is income. A couple of days later, I paid my swim instructor on February 24th, paid her $185. The impact is minus $185. I did that through Zelle, and my balance went down to $486.38, and the category was fitness. That's how we do financial tracking. It's as simple as that. Now, let's go to an electronic example, and let's show you what you do with credit cards, because this one's a little different, and I want to make sure we spend some time on how we track credit card transactions. Like I say, back here, we said our February 28th balance was $585. On March 2nd, we had a credit card payment of $185. So our current balance is $400. This is not how we're going to track our finances. Instead, we would say on February 28th, we had a month-end balance of $585. On March 1st, we had a Macy's purchase of $120. We paid it by paying this $185 to the credit card company on March 2nd. On March 2nd, we went to Good Food Restaurant. The impact was $65, so we paid $185 on March 2nd. So it's that same $185 payment that we showed up here, but here we're itemizing it. The itemization is everything. What you don't want your credit card to become is an excuse to be lackadaisical with your awareness. You want, even though you make a credit card transaction, to maintain the awareness of where your money is going. So this is how we do it, by itemizing that expense. Here's an example with our old example. So remember those first few transactions when we had the fitness and we had a balance of $486.38? Well, here I used, let's see, $373.43. So $373.43 of a credit card payment. But that was made up of all these various transactions that happened in the month of February. And I show the first one was Giselle's. That's a restaurant. It was $79.75 of outgo. So the impact is negative $79.75. Brings my balance to $406.63. Mind you, this is my checking account balance that brings it down. And the category is eating out. Another restaurant, San Pancho. As you can see, I did a lot of eating out. Matter of fact, it looks like this entire credit card payment was for eating out, which is very interesting. And this is actually a real credit card transactions that I logged in the month of February. So again, categorize your transactions. Macy's is probably clothing. Good Food Restaurant is probably eating out. Categorization allows you to do analysis later on. Sometimes people may say, what am I spending all my money on? And if you're categorizing, you can see like, look, eating out is a big expense for me. Maybe I can reduce that. All right. You can also answer the question, how much do I spend eating out? If you categorize. Remember, one thing is very important. Groceries and eating out are two completely different things. You should definitely in your budget have a line item for groceries, and you should probably have a line item for eating out, because most people do that every single month. Perform those 3 steps. They create awareness. Do them weekly changes your life. It offers perspective and it creates some friction. The next steps make this practice even more useful. So check this out. Note your anticipated transactions for the rest of the month. Okay, so what do I mean by that? Note the additional income and expenses that you know are going to come. So let's say you've gotten your checking account balance down to $400. You know you got an upcoming paycheck of $950. You know you're going to go to New York this month. It's going to cost $300. Your electric bill, you got some bills coming, and here are those bills. What's going to be left after all that spending? is something I call your URCAB, your unreserved checking account balance. So that's your checking account balance minus your anticipated expenses equals your unreserved checking account balance, which is called your URCAB, and that would be 425. So we started with 450, we added 950, we subtracted all these items, and that left us with 425. That is your URCAB. That's what's left after you have set aside everything that you're going to set aside. And when you're trying to spend some money, when an opportunity to spend money comes up, check and see if it's in your unanticipated transactions. That way you know you have a source of funds. That's where the source would be. Okay. So by doing this, now not only are you tracking what you spent, but you're creating more awareness as you move forward. Spend only when there's a source. So turbocharge this behavior by deciding in advance what you're going to spend. For example, you can allot yourself $100 for eating out for the remaining of the month. So if you walk into a Starbucks and you know you got $100 available, if you spend $20 in that Starbucks, you make a note of that, say you have $80 left. The source was the $100. You know you have that. So now you can spend the $20. You're free to do it. And then this is the optional step 5. Go public about problem areas to generate support. For example, let's say eating out is your problem and you want to spend, let's say you, over the last 3 months, and I highly recommend people do this. If you want to know what's going on with your money, just look at your spending for the last 3 months. Pull up your checking account and your credit card statements and figure out what have I been spending my money on. Categorize everything. So let's say you figure out, oh my goodness, I've been spending $500, $600, and $700 the last 3 months on eating out. That's way too much money. I want to spend $100 each month on eating out. Tell somebody, tell your friends that, and then at the end of every week, let them know how much money you spent eating out. Just send them a quick text message and say, hey, over the past week, I spent $30 eating out. The plan is to spend $100 for the whole month or $150 for the whole month. I'm at 30 out of 150. I'm doing well so far. That's it. And hopefully you send this to people who aren't going to judge you, because sometimes you might say, hey, the plan was to spend $150 for the whole month. I went to Cheesecake Factory. I took everybody out. It cost $300. I already blew it. You want somebody that's going to respond, hey, way to go. Thanks for letting me know. Let me know how I can support you as you go forward, because that's what we need. We don't need condemnation. We just need support. But accountability is also important, which is exactly why we suggest this going public. You can go public without condemnation. So I say this was an example that I just gave. So here's some advanced topics that we could talk about later. You know, managing reserves, financial net worth calculation, budgeting. Because in order to do this, a lot of times it's really helpful if you have a budget. The weekly reporting. Again, I like to say this is what I plan to spend and this is what I actually spent. And then another one called net contributions to invested principles. We have videos on all these other ones. So if you're interested, just let us know. And we'll share that information with you as well. Thanks.